Then in part B, you need to prepare a memorandum to Fred Frugal where you provide detailed guidance on how he should perform the valuation of MyRide Pty Limited using a price earnings multiple. All right, then there's 1 mark available for communication skills, and that is awarded for layout and structure. So guys, that mark is awarded for presenting your answer in the format of a memorandum. So please refer to the suggested solution. Please make sure you have presented your answer in the format of a memorandum. You say that it's to Fred, it's from you, you are a consultant in this case, you put the date, and the subject is guidance on how to value MyRide Pty Limited or something along those lines. Please make sure that you also have a conclusion. Okay, so you've got the memorandum up front, and say memo so they can clearly see it's a memorandum. Say memorandum, who it's to, who it's from, the date, the subject, and then right at the end, clearly label that you have a conclusion. If you've done that, you can give yourself the mark here for communication skills. All right, so you need to provide detailed guidance on how he should perform the valuation using a price earnings multiple. Now guys, this comes directly from your lecture notes, but obviously it can't just be a memory dump from your lecture notes, not at this level. You need to use the information provided in the scenario in your solution. So it needs to be applicable to this specific scenario. It can't just be a memory dump from your lecture notes. That's way too easy. Okay, you'll see the bulk of the marks are for actually applying it to the specific scenario. So make sure you use the information in the scenario in your solution. Once again, guys, I want you to refer to the typed up solution. You've got that in front of you. I'm not going to write everything out. That's a waste of your time. I want to explain to you how to get to the typed suggested solution. So please have that open next to you so that you can work through it. I'm not going to the typed suggested solution. I'm going to focus on how you should be coming up with all of those discussion points so that you can pass this part of the required. All right. So firstly, guys, think about it logically. If you had to now perform the valuation using a price earnings multiple, how do we perform a valuation using a price earnings multiple? We calculate the value by taking maintainable earnings and multiplying by an adjusted price earnings multiple. So obviously you now need to explain to Fred that this is what he needs to do. So first we need some sort of introduction over here. You need to explain to him that in order to perform a valuation using a price earnings multiple, first he's going to have to calculate maintainable earnings for MyRide. Then you're going to take maintainable earnings and multiply that by an adjusted price earnings multiple in order to derive a value. So that's your introduction. Explain to him this is what we are trying to do. And then explain that you are going to discuss each part of the calculation separately. So first you are going to explain how he should calculate maintainable earnings for MyRide. Then you are going to explain how he should calculate the adjusted price earnings multiple. And finally, you'll explain how everything should come together so that he can calculate a value. Let's start with the calculation of maintainable earnings for MyRide. So first, guys, explain to Fred what we are trying to do over here. We are trying to estimate earnings that MyRide will be able to maintain in the future. Now, in order to do that, we need historical information. Based on the historical information, we are going to then try and predict what earnings will be in the future. So he's going to have to extract historical data or historical earnings data from the accounting records. But you know, we don't just use that data as it is. We need to make certain adjustments. If we want to try and estimate what earnings are going to be in the future, we need to adjust for any exceptional or non-recurring items that are not expected to be repeated in the future. So if in historical earnings, there's any income or any expenses that are not expected to be repeated in the future, we need to exclude that because we are trying to calculate earnings that will be maintainable in the future. In addition to that, if there's any income or expenses that are not market related, we need to adjust for that because all income and all expenses must be market related. And further, if earnings includes any income on non-operating assets, we should exclude the income on non-operating assets because we are going to value non-operating assets separately when we get to step 3 of the calculation. So there's no marks for that, guys, because that's just a memory dump from your lecture notes. You now need to apply that to this specific scenario. So firstly, you are going to have to adjust for exceptional or non-recurring items that are not expected to be repeated in the future. So you have a few examples of this in the question. You know that computer equipment was stolen in the current year from the warehouse. MyRide was underinsured and consequently the insurance company did not reimburse the full amount claimed. This was corrected at the end of the year and MyRide is no longer underinsured. So obviously, guys, the loss that they suffered as a result of the theft and the insurance reimbursement are exceptional or non-recurring items that are not expected to be repeated again in the future, so they should be adjusted for. You need to deduct the insurance reimbursement and you need to add back the loss that was suffered as a result of the theft. Adjust for that. It's not going to happen again in the future, and we are trying to calculate earnings that will be maintainable in the future. In addition to that, the insurance expense for the year is understated because you're told that this was only corrected at the end of the year and MyRide is no longer underinsured. So for the whole year, they were underinsured, meaning that the insurance expense is understated. So what you need to do is you need to get the correct insurance expense and make sure the correct amount is being expensed and not this understated amount. So that's another adjustment that needs to happen. Then we said any income and expenses that are not market related must also be adjusted for because we want all income and expenses to be market related. You were specifically told that he lives in his parents' garage and has paid himself a negligible or insignificant salary since inception. So you're going to have to process an adjustment, or you need to tell Fred he needs to process an adjustment so that an earnings must be adjusted to include market-related salaries because salaries are currently understated. Then in addition to that, we know that MyRide invests all excess cash in a money market fund on which investment income is earned. That investment income must be excluded from earnings because we are going to value the investment separately when we get to step 3 of the calculation. So guys, you'll see if you look at the mark allocation on the suggested solution, the marks are allocated for applying the theory to the scenario. Please make sure that you do that, okay? It's not a memory dump from your lecture notes. Then, in addition to that, guys, you know, normally if you're performing the calculation, I tell you, if they give you 3 years of information, use 3 years of information. Use all of the years given in the question because you are trying to identify a trend. So you need to tell Fred, he needs to process all of these adjustments for a number of years so that he can identify a trend so that it's possible to estimate what earnings are going to be in the future. Now, in this specific scenario, however, you were told that the business was established 10 years ago by Fred Frugal and experienced significant growth since inception, with earnings becoming more stable over the last 2 years. So because earnings have become more stable over the last 2 years, it would be appropriate in this situation to focus the calculation on the last 2 years. So what he needs to do is he needs to extract historical earnings information from the accounting records for the last 2 years, and he needs to process the adjustments that we discussed. So all of these adjustments that we just discussed, he must process those adjustments to the last 2 years. Then it's also important to note, guys, this earnings figure over here and the PE multiple must always be comparable. And the price earnings multiple is going to be after interest and tax. So because the price earnings multiple is after interest and tax, when Fred is calculating maintainable earnings for MyRide, he must also make sure that maintainable earnings for MyRide is after interest and tax. Then, let's move on to the calculation of the adjusted price earnings multiple. So what he's going to have to do is find a similar listed company. And the company needs to be as similar as possible to MyRide in order to reduce the number of subjective adjustments. Because you know we are going to take the multiple of a similar listed company and we are going to adjust for entity level differences. And those differences, those adjustments that we make, they are subjective. So you want the similar listed company to be as similar to MyRide as possible. So first he has to go and find a similar listed company. Now, because the company is listed, they will have a listed share price. And that listed share price can be used to calculate the price earnings multiple by taking the share price and dividing by diluted headline earnings. That gives us the price earnings multiple of the similar listed company. Now, obviously, there are going to be differences between MyRide and the similar listed company, so we now have to adjust for those differences. Once again, guys, not just a memory dump from the lecture notes, use the information provided in the scenario. So what differences are we aware of? Firstly, MyRide is a PTY limited. Obviously, the similar listed company is a listed company. So because MyRide is a PTY limited, compared to the similar listed company, they're going to have limited access to finance. It's going to be much easier for the listed company to raise new finance than it is for a PTY limited. In addition to that, we saw that the business has very few employees, and most of the positions have been filled with Fred's family members and friends. So MyRide is dependent on a small number of key employees. And obviously, a big listed company is not going to be dependent on a small number of key employees. So that's another difference that would need to be adjusted for. In addition to that, if Fred sells his shares, you specifically told that the reason why he paid himself a negligible salary is because he's more interested in growing the business so that it can be sold and he can retire. So if he now actually sells his shares, his goal is to retire. So he's no longer going to be involved in the business, which means the business is going to suffer a loss of expertise if Fred is no longer involved. Now, guys, all of these points that I've discussed with you, all 3 points, the fact that MyRide is dependent on a small number of key employees, the fact that they have limited access to finance because they are a private unlisted company, and the fact that because Fred is going to retire, it will result in loss of expertise. Those are all negative factors, which make MyRide more risky than the listed company. So because it makes MyRide more risky than the listed company, the multiple needs to be adjusted downwards. Now, you can list a few other adjustments that can also be made. When we are adjusting for entity level differences, we look for differences in gearing, differences in the age of non-current assets, differences in size, diversity of product ranges, growth expectations, etc. And if there are any other differences, Fred obviously needs to adjust for those. Now, guys, please don't discuss differences in growth. We did identify as a positive factor over here that the business was established 10 years ago and has experienced significant growth, but earnings have become more stable in the last 2 years. So in the past, the company experienced significant growth. When you are adjusting for differences in growth, it's differences in future growth expectations. So for example, if MyRide currently has very limited growth that's expected in the future, but the listed company is expecting significant growth in the future, you would then adjust for that because it's a difference between the two. And it's a difference based on future growth expectations, not about growth that happened in the past. So just be careful. Please don't discuss that. That's growth in the past. It's not expected growth in the future. All right. Then it's important to note all of the factors we identified were negative. So we said we're going to decrease the multiple because it makes MyRide more risky than a similar listed company. So it should decrease the value of MyRide. But if Fred does identify any positive factors that make MyRide less risky than the similar listed company, then obviously he needs to adjust the multiple upwards. He needs to increase the multiple because MyRide is less risky, and that should then result in a higher value for MyRide. Then finally, Fred needs to calculate the value. So he needs to take maintainable earnings for MyRide and multiply that by the adjusted price earnings multiple in order to calculate the market value of business operations. Now, the value calculated excluded income from non-operating assets. So what you need to do now is he needs to calculate the market value of the investment, this money market fund investment. He needs to determine the market value of that investment, and he needs to add that to the value calculated. So once he's taken maintainable earnings for MyRide and multiplied by the adjusted price earnings multiple, that will give him the market value of business operations or operating activities. He then needs to add the value of non-operating activities, or in other words, the value of the investment, the money market fund investments. And finally, after he's done that, he needs to adjust for owner level or shareholder premiums and discounts. So in other words, control premiums, minority discounts, marketability discounts, etc. Now, it's important to note, guys, when he performs this valuation, he is calculating the value of a controlling interest because the investor wants to purchase all of his shares for 25 million rand. So he's calculating the value of a controlling interest. But don't just add a control premium. The logic is, if he is using the multiple of a similar listed company to perform the valuation, a listed company is going to have many minority shareholders. So the value calculated over here is not going to be the value of a controlling interest because the listed company has many minority shareholders. So this is the value of a non-controlling interest. So because Fred is trying to value a controlling interest, he has to add a control premium. So he should definitely add a control premium to the value that he's calculated over here because he's valuing a controlling interest, and the value calculated does not represent control because the multiple of a similar listed company is used in the calculation, and a listed company will have many minority shareholders. Then, obviously, if he's valuing a controlling interest, he would not deduct a minority discount. He needs to consider whether he should deduct a marketability discount, or you need to consider whether he needs to deduct a marketability discount. And the answer is yes, because MyRide is a PTY limited. It's more difficult to sell the shares. The shares are less marketable, so a marketability discount should be deducted. Then one final discussion point, guys. One thing that you haven't explained to Frank. When we were adjusting this price earnings multiple for entity level differences, I just said adjust the multiple up, adjust it down. We didn't say by how much. When we were adjusting the value over here for owner level or shareholder premiums and discounts, we said add a control premium, deduct a marketability discount. We didn't say how much. Now, obviously, in your lecture notes, I've given you ranges that you can use for your calculation, and as long as you apply the principle correctly, you will be awarded the mark. That's the logic. If you add the control premium, you get the mark. If you deduct the marketability discount, you get the mark. When you're adjusting for entity level differences, if the difference makes MyRide more risky, you decrease the multiple. If it makes MyRide less risky, you increase the multiple. You get the mark. But we haven't told Fred by how much he should be making these adjustments by. What should he actually do? We need to give a bit more guidance here. And obviously, guys, you can't give that guidance because you're a CTA student, and that's actually outside the scope of your syllabus. That's why it's a principal mark always. The only reason or the only way you would ever know how to perform these adjustments with accuracy or to make sure that these adjustments are actually reasonable is if you have experience in doing this. So it's important to include something in the suggested solution which says adjusting for entity level and owner level or shareholder premiums and discounts requires valuation experience and knowledge of industry best practice. So, guys, I don't even know what you should be adjusting for. Only someone who works with this on a daily basis, who knows what's happening, who knows what's reasonable, what's not reasonable, how it should be done, etc. Only those people know how these adjustments should be processed, and only those people can justify why they're using certain adjustments. You need experience in this area. So Fred isn't going to be able to do this. You can't also give the advice because that's outside the scope of your syllabus. As a CTA student, you don't need to know that. But all you can do is you can recommend that he gets expert advice to do this. And it's important to note, remember, always use the information provided in the scenario. Up front, you were specifically told that Absolute Consulting offers a variety of advisory services specializing in company valuations. So you can tell Fred that you highly recommend that he uses an expert to assist with this, and Absolute Consulting specializes in company valuations, and you're happy to assist or happy to help if necessary. Just to wrap that up and make sure there's no unanswered questions about what he should be doing in the calculation. All right, guys. So not just a memory dump from the lecture notes, make sure that you actually applied it to the scenario. You can see everything came from the scenario. Most of the marks are for applying it to the scenario, not just a memory dump of the theory. That then answers part B of the required and brings us to the end of this question. Please let me know if there's anything that you're still struggling with. Thank you, guys.